May 30th, 2019, it's a Thursday, guys. The markets just don't want to surrender as easy as we'd like them to be. So we actually pull a tricky move 12 in an environment where move 12 actually does not happen. So more on that in just a second. But let's get ready to roll because it is going to be a great day. So some attack crash, we still believe that's coming. Nothing have changed. All the moves that we're observing all over the place, anywhere you look at it, is still the predominant move is move 11. However, we did get an interruption of the pattern slightly yesterday. However, we did broke for a tunnel. We did set the level of 2766. That's for the level that we're watching to be revisited either today or tomorrow at some point, basically in the next 72 hours. We did notice that the selling sort of paused at certain points in the day in stocks that have come down substantially, like the semis, the Apple type stocks. But what we're noticing, even on great news, all the cloud stocks, all the market favorites are actually dropping. Just look at what kind of money was made yesterday, guys. Congratulations on for those of you that jumped in this cloud massacre yesterday right at the open, because man, these were some awesome trades, guys. And look, they're showing no signs of any real rebound, specifically when we're talking about workday. I mean, it opened at 209, tested the level of 199. It is likely to retest the level of 195 in the next 72 hours, guys. So congratulations. I know some solid gains were locked there for a lot of guys. Now, why just kind of, you know, it had some tremendous opportunities, but it was more like 200% return on that one. Now, indexes, the most important observations, are now sitting just above the orange. For the last few videos, we've been focusing on saying, hey, indexes are under the blue. Another day under the blue line. Another day under the blue line. Well, yesterday was the first day we actually got under the orange line. And there's two things. There's two ways to actually look at it. One is when we get under the orange line, a lot of times institutional investors use that as a level to come in and buy, and I think that's what they were doing yesterday. But that buying didn't happen in a substantial volume. So expect a bounce today and followed by a bigger drop over the next 72 hours, guys. So clearly what we're doing today is focusing on watching the bounce, retest this 27.95, 28.05. So far, at the point I'm recording this, we're at about 27.90, 27.91 pre-market on S&P futures, and we're expecting possibility of them going all the way up to 27.95, possibly 27.99, and the critical area would be 27.05. Clearly, if we're breaking above the 28.05 on strong volume, if we're getting to 28.05 on weak volume, use this as an area to short buy puts there, guys. And if we're getting there on strong volume, clearly breaking above 28.05, it's time to cut positions, it's time to cut losses. Now, we're not talking about some specific stocks like what we're considering placing the trades on today, like PANW, Palo Alto Networks, PVH, VEV earnings. We're going to talk about that briefly. Now, here's what I mean when we're saying we are just sitting above the orange. Look at this, S&P 500 on the daily chart, just above that orange line. And you see how we pierced that level just briefly. Look last time what happened when we did that, right? We actually bounced out of that. Now last time and this time, the difference is this. Last time we didn't have this huge head and shoulder pattern that was developing over the course of 90 days. The best case with patterns, guys, is when you observe them on the 60 to 90 day time frame. That's exactly what we have with this head and shoulder pattern. And if you look at multiple charts, which you should be doing daily, guys, for those of you who haven't taken the course, just make sure you guys take this weekend and just study the heck out of these charts and patterns and divergences, of course, so this would become more and more clear to you. So if you take a look at Amazon, you take a look at pretty much any leading stocks out there, they are all drawing these head and shoulder patterns. And the significance of that pattern is they're not doing it. Like sometimes you'll see me sending the message, hey, intraday we're at head and shoulders, or intraday we're double top, triple top. These are really important formations. So we're talking about the summer tech crash. That's what we're looking at. These head and shoulders patterns, guys, that develop over these specific time frames or 90 days, they're very meaningful and they do indicate where things are overall headed. So for some of you, they're not big risk takers, they don't want to trade weekly options for whatever reason. Look, guys, just buy August expiration puts between now and then. I mean, some of you may be caught for an amazing surprise because we could be heading all the way back to this 2350 level. Now, I know right now it seems like Oh, Leonardo, you're losing your mind again, as always. Okay, so, but when we actually, in August, trade in right here at 23.50, 24.50, it's probably not going to look that I'm crazy again, but it's going to make a lot of sense. It's hard to imagine this now, but guys, sometimes when you look at charts and patterns, you should really be focusing on what's coming next, not what's now. So right now, things are looking like pre-market, things are a bit bullish, things are a bit in the green. That does not mean that we're not going to finish in the red, and more on that in a bit. Now, Amazon, right? So we talked yesterday how the third day under the blue, plus the black candle action. Amazon retests the same levels we've seen at 1807 not so long ago, a few days ago. But now we're 4 days under the blue. So today is an incredibly important day for Amazon, because if it's going to stay under the blue, look here, under the blue line for 5 days in a row, if it cannot bounce out of it on what appears to be slightly positive action pre-market, guys, the market is heading significantly lower. And look, I was just mentioning the head and shoulders, right? Same pattern on Amazon. Here's your shoulder, here's your head, here's the other shoulder, just under the blue. That's a perfect timing to actually come in and get this, while most of the people are betting on the fact that this level will not be broken. And yes, could we consider the aspect that Amazon could actually be playing around with this level for like a couple of days? Sure. But observing the VIX action is such in a solid uptrend, which clearly, if you're looking at VIX pre-market today, it looks rather weak again, but overall, it's still an uptrend. The uptrend has not been broken, and I think we're going to get that break lower sooner than what most of the market's participants expect. So let's talk about the tunnel. So we break through the tunnel out of this tighter range, and this is where we're at now. Okay, we are likely, these 3 orange dots, that's what I want you to focus on today, guys. The 3 orange dots. Dot 1, when we're trying to retest this low at 28.05. Dot 2, when we actually broke through it. And dot 3, when we're actually going to come in and we're going to retest that level. So we are expecting the market to retest that level, 27.99, 28.05. We are considering that level as a great entry point to buy puts, not to reverse our positions into calls, but to buy puts. The only aspect of this strategy that would cause us to change our view if we're seeing some strong, heavy volume, and that just has not been the characteristic of the market. The volume on the upside has been rather weak. Okay, so this is what we're doing. We're considering PAMW puts 210, 200. Stock currently trades pre-market at 203. Buying in the money, because some of these, they're good stocks, right? PAMW, but what we're noticing, the banks are actually taking the money out of the stocks on good earnings reports, just like what we've seen with a lot of stocks we're doing yesterday. And clearly, if it bounces to 205, that would be a good time to come in, buy this 210, maybe even 200 puts, right? If the VIX is staying above 17, 18, it's okay to buy these 200 level puts, because chances are we could see PAMW at a level of 190, 195. What makes us think that is this huge development over the last 6 months now, head and shoulder, multiple top formation, divergences on the RSI, and so on. So this is where the stock was yesterday. It's going to open around 205, 203 so far pre-market. We're expecting to move lower to 195. Buy in the money. It's a high probability trade, guys. Pretty simple. Just don't, you're probably not going to lock 500% gains on this, but doubling money, tripling money in this trade should be no issue for anyone that's ready to roll this morning. Now, here's the weekly chart on this Palo Alto Network stock, and we're noticing the same thing, same divergences. We're getting confirmations on MACD. We're getting confirmation of the triple top and accumulation debrief. Guys, this stuff looks good, and again, this is the orange dot. This is the level we're targeting right here, 190s, right around here. And the idea is this, right? If it is going to open under the blue line, which it definitely looks like, almost like a 99% probability that we are going to open under this blue line, then I think more institutions are going to come in and sell. If selling accelerates, that could propel short-term move to this 190, 195 area. And here we go. We're going to be ready to lock in our gains on the put side there, guys. Considering PVH, oh man, whew, guys, look at this, man. What we're seeing is a lot of stocks that have held up over the last 8 years, retail stocks, are actually breaking down. Remember, just kind of like the video I posted on Tesla, I said, oh, Tesla is about to do something it has not done in 2 years. It's about to break a level that nobody thought it was going to break, and it did. And I think the same thing is about to happen with PVH. Yes, what you're going to look at, you're going to say, Leonardo, but the stock is already down quite a bit pre-market after this earnings report. Yes, it's down from 99 bucks to like 87, 88 level. However, I think it is about to do what it hasn't done in 2 years. And that's it's going to break the 80 level. So there's still probability of it to make another $7 to $10 move on top of being roughly 10 bucks down so far after this earnings report. Yeah, crazy things like this do happen in the market, guys. And what we don't want to do, we don't want to go obnoxiously crazy. We don't want to be buying certainly no 80 strike puts. But if you buy in the money 90, 95 strike puts, you're going to do very well. For those of you with small accounts, you can actually consider buying like 85 strike puts on PVH. The chart is super bearish. Ton of stuff. Got confirmations on MACD, multiple time frames. Look at the hook, guys. Remember the blue line about to cross the orange line. Remember this hook. It definitely tells you that a move lower is in the making. Now, here's the thing. $75, $78 is a good probability for PVH in the next 10 days. So if you're skeptical about trading weeklies, just buy yourself a little extra time on this thing. And just stay the course, guys. Stay the course. Higher distribution, volume days. I mean, look at this. There's your crossover. I mean, there's just, man, that's a good-looking chart. Gotta love it. Market move yesterday, May 29, was a move 12. And you're going to be like, whoa. Isn't 12 like a bullish move, Leonardo? I know. It had all the characteristics of a move 3, but the way it just acted throughout the day really had a characteristic of a 12. Here's what I mean by that. Check this out. So we gap down, huge gap down. Typically on move 12s, we don't get a huge gap down. Typically move 12s do not happen when you have VIX accelerating, moving higher, when VIX is an uptrend and above 16. But in this particular case, I mean, we're clearly getting a smiley face. Focus on these two orange dots. So first, the gap down. This is where we open at 9:30. This is where we close at 4 p.m. We open and we close right at about the same time. If we were to draw this line around here, we're closing right about the same level, guys. Okay? These two dots are meaningless. I'm just trying to draw a smiley face. If you studied the 13 markets move formula, you guys know I refer oftentimes to move 12 as a smiley face. As if the market is saying, hey, don't worry, there is really no crash here. However, everything else besides the formation of the move still points to bearish factors. So we surely want to pay attention to this move 12. That's why we do want to jump out of the put side if other things are going to develop on the bullish side, like the crazy volume to the upside. But if the volume is just stalemate like it's been over the course of the last couple of months, nothing to worry about. So we're probably going to have a temporary pop followed by a much bigger drop. But this is why we're logging it as a move 12, because we get a smileless face after the gap down. What we do know about move 12s is that they're highly repetitive move, guys. So we're likely to gap down again tomorrow. Now, 2-day sequence is 2-12. This is how it looks on the chart. So here's your move 2, gap down, move 12, smiling at you. 5-day sequence 11-3, 11-2, 12. And this is how it looks on the chart. If you use your imagination, guys, this is what I drew these lines for. It's really over the 5-6 days, actually 6 days here in the chart, you're really seeing a bigger what? It's a bigger move 2 in the making. So here's your drop down. Pop, pop, followed by a bigger drop. So we got the bigger drop. Now it's reasonable to expect pop, pop, followed by a bigger drop. So get ready. It's about to happen. VIX review, VIX humidity, above 16, uptrend confirmed. Okay, buying out of the money stuff justified. 18.3 to 19.04 was the high, closing at 17.84 in the VIX. Here's how VIX uptrend looks. Look at these orange dots right here, guys. 3 gap ups higher, 1 gap up, 2 gap up high, 3 highly bullish behavior on the VIX. If we connect the dots, very much beautiful uptrend so far. We just want to make sure we don't break that 17 level. We want to make sure that we're not, ideally, we are closing today above 17.4, 17.5 to maintain that beautiful uptrend on the VIX. Now, possibilities of market moves for today is at 2 minute. We're going to pop by 10, 10, 15. We're going to start reversing. We're going to have a possibility of a 12 where I'm recording this about 6 a.m. So you know, even though the futures are bullish right now, who knows, maybe right going to the close, we're going to lose a lot of these games. We can actually gap down a couple of points in relation to yesterday, and then we can still have a variation of a move to 12. Now, with all things being said, we are being cautious. We're watching for the volume, VIX, and other components of the 13 markets move forward. Determine if actually a move above 28.05 could be sustainable, and that's when we want to cut our positions if that is indeed what's taking place, and that would be an equivalent of a move 7 taking place. So trade with caution, but be strong. Do not be afraid to add to the put positions at the key levels 27.95, 27.99, 28.05. So pay attention to all that stuff. Until then, basically, until we get a break above 28.05 on strong volume, what you want to do is just maintain the simple strategy, basically shorten all the bounces all the way down to 27.11, 26.65. Watch for move to reversal between 10 and 10:30 a.m. Use good earnings report to short tech stocks and bounces. I know it sounds highly contradictory, guys, but that's what institutions are doing. We want to focus on what institutions are doing because that gives us often a high probability of what's actually going to take place, so we can lock in some healthy gains. Guys, with that being said, have an awesome trading day. Let's roll. Let's make it happen. Let's ready to rock tomorrow on Friday. I'll see you guys in tomorrow's morning video.